Good evening, and welcome to your Northeast Asia closing brief. Every major market in the region finished higher today, and in two of the three, investors spent the rally selling the chips that caused it. The catalyst came from Washington on Friday. American payrolls fell by 23,000 in July, against expectations of a gain of around 80,000, and the two previous months were revised down by roughly 100,000 more. That effectively removed the near-term threat of another Federal Reserve rate increase, the single fear that has punished this region all summer. Wall Street rallied, and the Philadelphia Semiconductor Index gained more than 2.5%. All three markets here opened on that news. Only one of them stayed with it. Tokyo took the relief straight into semiconductors and closed up 2%. Seoul opened up nearly 2%, then spent the day giving it back, finishing less than 1% higher with both of its memory giants in the red, and foreign investors selling almost 1.5 trillion won. Shanghai edged higher while its artificial intelligence hardware chain was sold off, and money moved into drug makers instead. One catalyst, three destinations. The KOSPI closed at around 6,300, up around 2/3%. The headline is not the index, it is the flow. Foreign investors sold a net 1.5 trillion won. Retail investors bought nearly 900 billion, institutions almost 600 billion. Domestic money absorbed a foreign exit and still produced a green day. Underneath, the leadership was nowhere near the chips. Nearly 700 stocks rose against fewer than 200 that fell, but the KOSPI 200 of large caps gained only around 1/3%, half the broad index. The KOSDAQ surged almost 7% to around 854. SK hynix closed at around 1,420,000 won, roughly $1,000, essentially flat and fractionally lower. Samsung Electronics finished at around 230,000 won, about $160, also down. Both fell on a day the world rallied on semiconductors. What worked instead was metal and hardware. Non-ferrous metals gained around 10% as a sector, with Korea Zinc up nearly 12% on the gold and silver trade. Hanwha Aerospace rose around 5% to around 1,152,000 won, roughly $810, helped by today's announcement of bidding for the country's second space center. HD Hyundai Heavy Industries also gained around 5%. The Shanghai Composite traded up around 0.5% into the close, near 3,960. That modest gain conceals a violent rotation. Shenzhen fell more than 1%, and the Chinex Growth Board lost more than 2%, as the artificial intelligence computing chain was dismantled. Optical modules, printed circuit boards, and server names all sold hard. The money went into medicine. WuXi AppTec, the country's largest contract research group, rose almost 4% to around 161 yuan. Late Sunday, it disclosed that a United States federal court had granted its injunction against the Defense Department listing that had threatened its American business, and it has already raised full-year revenue guidance to as much as 60 billion yuan. Innovative drug names across the market followed it up. Banks, usually the ballast that keeps Shanghai steady, did not help today. Industrial and Commercial Bank of China finished around 7.5 yuan, marginally lower. Tokyo was the market that believed the rally. The Nikkei 225 closed at around 66,970, up more than 1,300 points, or around 2%. It traded above 67,000 for the first time since late July, and broke through the 25-day moving average that had capped it. The yen sat near 158 to the dollar. Two names did most of the work. Recruit Holdings hit its daily limit, closing at around 16,165 yen, up nearly 23% after raising full-year guidance on Friday. Advantest, the chip testing equipment maker, rose more than 6% to around 34,260 yen. The most revealing stock, though, fell. Mitsui Kinzoku dropped almost 14% to around 27,855 yen. It also raised guidance on Friday and announced a 10-for-1 stock split, but its profit forecast came in well below what analysts wanted. On a day when metals led almost everywhere, Japan's copper foil specialist was the biggest loser on the board. Cheaper money is coming back into view, and every market here took something from that. What they took differed sharply. Tokyo bought the chip cycle. Seoul and Shanghai sold it. The question this leaves is the one nobody can answer tonight. Was Korea's fate simply profit-taking after a violent summer? Or is the foreign money that sold 1.5 trillion won into a rising market, telling us something about the memory cycle that Tokyo has not priced yet. Japanese markets are closed tomorrow for Mountain Day, so our next briefing will focus on Korea and China, with American inflation data later in the week, the next real test. Subscribe for our daily Northeast Asia closing brief. Thank you for watching AJP.